Good morning, students. Today I'm going to discuss about Unit 4, Banking Services to its Customers. Let us discuss about some of the services offered by bank. Some of the services are like remittance of fund, demand draft, online transfer, mail transfer, safety lockers, safe custody of articles, credit cards, and debit cards. Now let us discuss about remittance of fund. A remitter refers to money that is sent or transferred to another party. The term is derived from the word remit, which means send back. Remittance can be sent via a wire transfer, electronic payment system, mail, draft, or check. Remittances can be used for any type of payment, including invoices or other obligations. But the term is typically used to refer to money sent to family members back in person's home country. Let us discuss about the next topic, understanding. How will you understanding the remittances? So understanding remittances payment or money transfers made by people to another party. They can be made to satisfy an obligation such as bill payment or an invoice when someone shops online. So the next topic is demand draft. Demand draft can be compared to checks, but these are hard to counterfeit and more secure. This is because the drawer has to pay before issuing a demand draft to the bank, whereas check can be issued without ensuring the sufficient fund in your bank account. Therefore, a check can be bounced, but draft assure a safe and on-time payment. So the draft facility is available for people regardless of them having bank account or not. Anyone who wants to pay a certain amount for an institution or to someone with a proof of payment can be issued with the help of demand draft. Mail transfer. Mail transfer is another method of sending money from one place to another place by using the email. The mail transfer is possible when the sender and the receiver both are having bank accounts in the same bank but at different branches. Generally, no charges are charged by bank for mail transfer. So in this, remitter has to inform his bank to transfer a certain amount from his account to another person's account in the other branch of the same bank. The details of the receiver, such as his name and account number, branch, where he has the account, etc., must be provided to the bank. The remitter deposits the amount to be transferred with a small commission with the remitting branch. After receiving the money, the bank sends instruction by mail to the drawee branch to credit the account of the payee. Credit card and debit card. A credit card is a thin rectangular piece of plastic or metal. It is issued by a bank or financial services that allows cardholders to borrow funds with which to pay for goods and services with merchants that accept cards for payment. Credit card imposes the condition that cardholders pay back the borrowed money plus any applicable interest as well as any additional agreed upon charges either in full by billing date or over time. Next one is a debit card. So debit card offer the convenience of a credit card but work differently. So debit card draw money directly from your checking account when you make the purchase. They do this by placing a hold on the amount of the purchase. Then the merchant sends in the transaction to their bank and it is transferred to the merchant's account. It can take a few days for this to happen, and the hold may drop off before the transaction goes through. You will have a personal identification number to use with your debit card at stores or ATMs. However, you can also use debit card without a PIN at most merchants. You will sign the receipt like you would with the credit card. Now let us discuss about the online transfer mode. So the two important online transfer mode of fund is National Electronic Fund Transfer, that is NEFT. NEFT is a nationwide payment system that allows transfer of fund from one bank account to another. Individual firms and corporate can transfer the money from one branch to other branch account held by individual firm or corporate in the country. The Reserve Bank of India stated earlier that bank customer will be able to transfer funds through NEFT around the clock on all days, including weekdays and holidays. So individuals, corporate who are maintaining bank account can transfer fund using this NEFT mechanism. So now let us discuss about real-time gross settlement, RTGS. The acronym RTGS stands for real-time gross settlement, which can be defined as the continuous settlement of fund individually on an order-by-order basis. So real-time means the processing of instruction at the time they are received rather than at some time later. So the RTGS system is primarily meant for large value transaction. The minimum amount to be remitted through RTGS is rupees 2 lakh. So there is no upper limit of transaction. Transaction charge for real-time gross settlement initiated through online mode is nil. So under normal circumstances, the beneficiary branches are expected to receive the fund in real time as soon as funds are transferred by the remitting bank. The beneficiary bank has to credit the beneficiary's account within 30 minutes of receiving the fund transfer message. So let me discuss about the other services of banks like safe deposit and safe custody. Safe deposit locker or safe custody. So safe custody, what do you mean by safe custody? Safe custody is keeping your documents in safe by the bank for which a receipt is issued by the bank to the customer. On surrender of the receipt, you will get back the document. Safe custody fees is payable. Whereas safe deposit locker is taking a locker on annual rent, so where you can keep your valuable in the locker and a lock with the key will be given by the bank. So bank manager also will lock your safe deposit locker. The items are kept in joint custody, like with both the persons will be having the keys, and the lock will be opened only if both the persons are opening the lock by making use of their own keys. The bank has no guarantee for items kept in the locker in case of theft or loss. So with this, I'm ending this session. Thank you, students.